Hello everyone and welcome to today's No FOMO Charts Crypto and Stocks TA Charts video. Today is Saturday, September 7th, 2024, just about 8 o'clock p.m. Eastern Standard Time. Welcome everyone. This is a swing trading and investing technical analysis YouTube channel. I am No FOMO Charts. I'm on YouTube, X, and TradingView. Let's jump right into crypto. Total crypto market cap. We finally death crossed in the market. This is bad news for the crypto market. The 50 EMA crossed below the 200 EMA, and long term, that basically means we have bearish market conditions. That has not happened since September 2023. Now, the bearish scenario is we continue to make lower lows and lower highs in the marketplace, reaching the 1.7 trillion and the 1.45 trillion market cap zones. That would confirm this downtrend that we've been having for this year. Now, realistically, intraday oversold RSI levels, for example, with momentum on the 15-minute, 1 hour, or 4 hour, for example, will probably have their oversold bounces that the algorithms are going to basically buy. However, as an investor, I'm not eager, I am not excited to buy now because I need to see a big bottom or a prolonged sideways consolidation. So that's what I'm waiting for. In the bullish case, it has to be long-term mindset because on a weekly, it's still possible, like I said last week or 2 weeks ago, to make this cup and handle pattern, retrace deep into the 1.5 trillion zone, and then maybe next year or 2 years from now, we can continue the uptrend, possible in the most bullish scenario. Realistically, it's just going to keep going lower high, lower low until we find some kind of bottom, wherever that is. And the bearish scenario is if the stock market crashes, then probably crypto will crash as well. Bitcoin, very similar analysis. We have on the daily, not quite a death cross. It's getting close. Bitcoin probably has to get into the upper 40,000s for this EMA 50-200 to death cross. However, we're still in the downtrend consolidation since June. Lower low, lower high, lower low, July. Lower low, lower high, excuse me. Lower low, lower high, lower low. That did turn into a head and shoulders from last week. The target, 13%, was not hit yet. We can still test 50,000, 49,000. Now, if you pull up a Fibonacci very quickly on Bitcoin, 2023, the low to the high of 24 this year. Where can we go next? 382, 51,000 Bitcoin, 44,000, 36,000, even 28,000 in a worst case scenario this year, 21,000. It's not impossible. It's not impossible. We are testing the support levels at 51K. We could upside down head and shoulders, yes, in the bullish case. So now the three scenarios. Starting with bearish is we lower low, lower high, all the way down to about $45,000 Bitcoin. Now, realistically, once we poke out of the Bollinger Band, maybe another week or two, 50,000 probably have a intraday support bounce. Most bullish case I can give to people who are perma-bulls on Bitcoin is we need to retest 100 weekly EMA, 46 and 36. We need to test those. For sure, we need to test 50 again and bounce off of there, hopefully. If not, then it's probably prolonged selling in the market. Ethereum's a different story. We have the death cross already that happened on August 14. We have a secondary longer-term death cross that happened September 3rd. Now, the only good thing I can say about Ethereum is if the price keeps crashing, we should get a bullish momentum play at some point. I need to be very patient for that. Need to be very patient. We pull up some pivots, find support. Next level 2,000, nice even number. 1,900, 1,800. So I want to see this. We could double bottom in a bullish case. Realistically, it's probably going to fade down to about this 2,000 to 1,800 range. Then the bulls will bounce for a little trade there. But long-term investing, death cross, Ethereum ETF is not enough to keep us alive in the market. Now, Solana, we had a nice little bounce, but then ended up fading all the way down to 126 support. So like I said last week, one of these 126 support levels is not going to hold, and we're going to crash out of here. So because we're not breaking out, the odds are more likely we're going to crash down out of here. So it looks like Fibonacci low to high. I'm all out of Solana. I'm all out for a long time now as an investor. I have not bought Solana that much this year, just little trades in the consolidation channel, but I'm not investing in that right now. So what's happening is trend line support. There's a huge zone down here. We triple topped. We're consolidating here, and this rectangle is plus or minus 60%. 60% crash would take us perfectly down to $50, $48, that trend line support in a bad case scenario. So watch for the break, the loss of $100, $120, and then crash down to possibly 80 in the next 6 months or so. It takes time. But once we lose significant levels of support, there could be capitulation selling. Now, the reverse is if we have a bullish scenario, we need that cup and handle to form. The handle, a sideways is not a handle. It needs to retrace negative 33% down. So we might get that. But the fact that Solana is stalling here is not good. All right, let's move on to stocks. Might go a little longer because I have some setup today. But stocks, welcome everyone to stock segment, September 7th. And earnings season is over. The NVIDIA crashed the market this past week. Not crash, I'd say sold off. Sold off. I sold off, I shorted tech, and I long natural gas. And 2 correct plays last week. Now going into this week, earnings releases. We have Oracle, GameStop, meme traders going to watch that. Petco, Kroger, Adobe, Signet Jewelers. Now for economic data, we have a lot of data. Important. CPI, core CPI, PPI, core PPI. These are the 2 inflation data and unemployment claims that the FOMC is very closely watching. Federal budget balance, consumer sentiment, inflation expectations, some natural gas storage data, 10-year, 30-year bond auction as well. And just a quick little ideas, stock charts, Micron, Qualcomm, and Applied Materials aim at price support zone, resistance, XLP, XLU, ABBV. Take a quick look at that later, but start off with the SPY. Now, the bearish scenario played out this week, and this is why I always prepare for 2 or 3 scenarios. As soon as we had that selling off on Tuesday, a day after the holiday, remember, because I've been talking about this resistance on SPY for several weeks now, turned into the potential double top, which looks obviously real now, the double top M. So where can we go down to? It really depends on some of the intraday timeframes. We're starting to hit the 4-hour oversold. The 1 hour's depth crossed the 4-hour oversold, so we might see a little bit more selling into the 535 region, possibly even 520 or 513. So the weekly, we did get that bearish evening star pattern. It's a matter of how deep are we going to penetrate into the price on the downside here, okay? When I say penetrate, it's because sometimes we get a gap down, penetrate as in piercing the candle, we might get a V-shaped recovery, so I'm watching for that. It's rare for the market to just crash straight down. That was like COVID. But if we're going to have any good data that comes out this year, we could have a little bit of a bounce, sort out that lower high, and try to short down for the next lower low. Nasdaq is very similar. This one was a little bit more obvious because NVIDIA, for example, had such a strong sideways consolidation. On a weekly chart, we finally got that evening star, like I said, is delayed. We had a holiday last weekend, so that's why other people were on vacation or doing other things, and then we came back to the market and said, oh, we're going to short. So in terms of that little delay was a little bit off-putting that week, last week, but we finally got the short that I was hoping for. So where can we go down to? We could go down to 440. We can also retest this gap zone somewhere here at 421 as well. The 4-hour is starting to death cross. We're seeing some selling pressure. Hour is also death crossed as well. The Bollinger Band and the pivot is probably going to be our next target, like I said. So watch out for this. Lower low, lower high, wherever this goes, 426. Now, if we have amazing data, reverse, going straight to 460. Dow Jones, why did this happen? You might ask. Why did this happen? Well, I would say we have to zoom out. Zoom out on a weekly for 5 years. Understand. Are we at a high price or a low price right now, August to September 2024, compared to COVID crash, compared to 2022 interest rates, compared to flash crash of October 2023? We're high. resistance. We're at a high spot. And if we need confirmation, the RSI this year, we're starting to show us bearish momentum once we get to this overbought area. So on the daily chart, we got a little bit of that bounce. Like I was saying, the day traders know that play. But once we tap out onto a high resistance zone, we didn't quite hit that top Bollinger Band, but hit a resistance on the pivot points and then sell off, capitulation, correlation with the market. So the price is to the downside. Next targets 402, 396, 385. This whole open blank space down here. That's what I'm targeting. If we happen to have a bounce, if CPI, PPI is amazing this week, we're probably going to see green days on Tuesday and Wednesday. So if that happens, immediate level of resistance 408, 408, 410. Now, IWM is very similar to Dow Jones in terms of the technicals. We barely tapped that overbought region, and I shorted that spot. Perfect bounce play, but turns into a lower high. So resistance was the name of the game. Watching that previous resistance, let me pull up the older pivot so we can see all the old pivots. Right there, we lost the previous pivot point. If you're a trader, you know this probably, that we hit resistance. It doesn't always have to get out into that second standard deviation of the Bollinger Band. That's actually rare. Only happens like 10 or 20% of the time, right? So it needs to pull back to reset. So targets to downside 203, 197. We have a good bounce, rejection below probably 213 is what I'm anticipating. Now to finish off, just really quick, rapid fire. Just some charts that I'm looking at before I start the stream video is I'm looking at Micron, right? This is what I'm talking about. Very quick. Micron, support at $86. If we lose that, the next one or two ATRs down would be approximately 81 or approximately 76. So I'm very closely watching this. We lose this support. These are the two targets, so there could be a potential short opportunity. Now, if the whole market flips around this week in a bullish zone, this could be a nice double bottom play right into earnings. That's why I'm pointing this out for somebody. I might play this myself. So Qualcomm, now also not quite perfect as Micron, but approaching the double bottom zone, support level about 156. This is the poor lower high, very, very not inspiring. But if we lose the support level, which we just lost a pivot, the next level down is quite a ways away. ATR is about $7. So the first move could be here. If that's almost 5%, it's a long ways down. Then 9.4% is my second target if we're going to lower low bearish setup. If this happens to double bottom, then you can see clear level of resistance 184 on the top side. The next play. AMAT, apply materials. So this is already in this lower low, but on the candlestick, it looks like it's approaching that double bottom. So I'm watching to see if we're going to break that support for the short break. I mean, the better spot is up here, but sometimes if the whole market is going to crash, you can get these continuation plays. ATR plus or minus $8 is one ATR. So 188 resistance on the top side, and the bottom side is 166. Watching for that closely if support holds or not. It doesn't always do that. Next, resistance play. XLP, we're having a double top resistance overbought setup, resistance on XLP. So see if that pulls back to the 12 or 26 EMA or even the 20 EMA. So 81 to 80. I'd say 68 is my target, this area. See if that crashes or not. XLU, very similar, approaching the double top area overbought zone. So see if that's going to pull back to about the 50 EMA. You can also use ATR. It's only about $1.93. So we can see that if it pulls back, there's only about 1.2 to 2.4%. But if somebody does long-term options, there could be a play on this. I might do this if this is going to pull back, because last time we got overbought, even in an uptrend, the market pulled back like 6% on XLU. So watching that. ABBV, last one, resistance play. We hit the overbought zone with the momentum loss with the death cross on the MACD signal line. And in terms of the support, there's a little bit of a gap here. This is a little bit delayed by about 2 days. I would have shorted this a little earlier. I found it a little earlier, but there's some room here of 185 and 178 on the downside for that support play. Okay, everyone, thank you for watching this video. If you like this video, go ahead and click like, leave a nice comment or request, subscribe to the channel. Happy trading, and remember, risk management and patience is the key. Thank you, happy trading, and I'll see you in the next video.